have to get some F&O strategies as well. And joining us is our good old friend Siddarth Bhamre. Siddarth, good to have you on the show. Well, how would you play the Nifty now? Do you think there are some severe resistance at the 20-day, 50-day moving averages, or do you think it looks set to cross them?
Good morning, Lata. Good to talk to you after a long time. Lata, market and participants need to understand that 17,000 has emerged as a very crucial level for market now. And for any future shocks for market to absorb, we need to create a good buffer from the 17,000 odd levels so that any surprises on the negative side comes, market corrects and still this support is intact. So far, plus minus 100, 200 points on Nifty, this support has remained intact. Now, how things are positioned, things are not looking that bad. In fact, if you look at FI's data, when market corrected 500 points, Nifty corrected 500 points, they didn't short. And when market went up by 500 points, there were buyers in index futures, there were buyers in stock futures, there were, bought some calls. So they are positively positioning themselves. I understand we all, are glued to the cash selling figure. But from a very short-term perspective, what matters is what they are doing in futures and options. And I have been, talking about this repetitively. So they are positive at this point of time. So you need to create buffer. FIs are positive. Now, when market was correcting, we did see Nifty and Bank Nifty futures adding a lot of open interest, which means it was short formation. In yesterday's big up move, we haven't seen any major short covering happening in Nifty and Bank Nifty. So point one, there are still shorts in system. And point two, there was a huge spike in implied volatility. And that implied volatility yesterday didn't fall despite huge rise in market, which means there is still skepticism in this market, still pessimism. And market thrives on pessimism. So there is still more room for the upside in this up move. Overall, I believe, and what the statistics are suggesting, that we are not in a market which would, give you a big crash-like situation until and unless we are substantially below 17,000. And hence, we need to have that buffer. Plus, important point, Lata, and especially from your sector, banking. And if you look at the top three trio of private sector banks, ICICI Bank, Axis Bank, and HDFC Bank, all three are in a decent positive momentum. For Axis Bank and ICICI Bank, it is pretty obvious to see on charts and say that they are in uptrend. But HDFC Bank, after quite some time, is showing signs of breakout with formation of long position. And we all know that if these three names we are positive on, you can't be bearish on market.
Okay. What about individual stocks then?
Yeah. So from individual stocks, apart from banking, we are seeing decent traction taking place in auto names. So we have, recommended to our clients Maruti, which looks, pretty decent from current levels. Even if you look at IT names, Infosys is our preferred pick. We are seeing some formation of long positions at lower levels. And obviously, we have names like L&T, which is doing pretty well for itself among large cap names. There are a lot of mid cap names as well, which we are doing good. So our idea, Lata, is more to be on the buy side, even on stock specific, apart from these large cap names which I mentioned.
Okay, since you spoke about the autos, Siddarth, I'm going to take that forward with our next